Why is the point of control the most important price level on your charts? Hi, my name is Coleman and I'm a senior analyst at FXStreet. I want to discuss with you a trading tool known as Market Profile with an emphasis on the point of control. This technique is used by professional traders and institutions, and it is an essential weapon to have in your trading arsenal. We will discuss the basics. We will then dive deeper into how you can utilize the point of control for both intraday trading and swing trading techniques. As an overlay on your chart, it is a critical tool to identify the potential start or end of a trend. Let's talk about the basics. Market Profile can be applied to any auction-based asset, such as futures, forex, indices, and even cryptocurrencies. What is an auction? Well, think of any asset. There are buyers and there are sellers. Buyers dictate how much they are willing to pay. Sellers, the price they are willing to sell. Until both parties agree on a price, no transaction takes place. First, we have the value area. This is where 70% of the trading activity has taken place. Second, we have the VAH, and that stands for value area high, and it shows the top of the 70% range. Third, we have the VAL, and this shows the base of the 70% range. Fourth, we have the single prints. Price has spent limited time and produced limited volume at these levels. Fifth is the main component, the point of control, or the POC, sometimes called the VPOC. This is the exact level where the most volume took place. It is like a magnet for price. There are various different types of market profile indicators. The most popular is called the SVP. This stands for Session Volume Profile. This shows the market behavior during one trading period. It should be noted that each previous day highlights all the information from that session. Traders can use this information to decipher trends and support and resistance levels. Another popular market profile indicator is called the PVP. This is the period volume profile and is normally used for higher time frame analysis. Let us look at the point of control on the daily chart. A falling point of control shows that price is migrating lower. This is a bearish condition. A rising point of control shows a bullish condition. This is far better than any moving average. It shows where institutional players have actually traded and built positions. A static point of control shows a market that is in balance. Buyers and sellers are happy with the current price. We now know the basics. How can you apply Market Profile to your trading? If you're a swing trader and looking at moves that last 2 to 3 weeks and possibly beyond, then I recommend that you look at the point of control from 12 months, 6 months and 3-month periods. If you're looking at trades that last 2 to 3 days, then monthly, weekly and the daily point of control. An intraday or scalp trader needs to look at the developing daily market profile. Let's look at some short-term day trading techniques using the developing market profile. The point of control is a pivot point for day traders. Ignore this level at your peril. In the rawest form, if the market is above the POC, then this control level will act as support. And the other way around, if the market is below the POC, it will act as resistance. The previous value area, high or low, can also attract traders. I know I can hear you say it can't be that easy, and it's not. Sometimes it flips from support to resistance, so it should only be used as an overlay for other technical analysis techniques. Let's discuss the point of control reversion setup. The market moves quickly away from the point of control. We should see a rejection or a wick on the chart with the market profile showing low volume or a single print. A move back inside the value area confirms that the market has rejected the highs. Traders will then take short positions back to the point of control to rebalance the market. Lastly, we can look at the naked point of control. These are high probability magnets and provide excellent targets. This could be used as the third and fifth wave in an Elliott Wave theory, or the completion of a cipher pattern. I'm a swing trader and I use the point of control in over 70% of my setups. First, let's keep in mind that institutional traders or smart money need high liquidity areas to execute large trades. They could have been slowly building short positions with the daily point of control moving lower within a bearish trend. Using what we have learned from other tutorials we have watched on FXStreet, we spot a large ending wedge formation. We know that the start of the wedge is the prime target area. Do we have a point of control in that vicinity? Is it before or after the wedge? If it's before, we might consider closing out our short trade early. This is a past example of using the 12-month point of control. I like to hover over the chart to highlight the exact level. I then use the sinking tool and a horizontal line to draw a level on my charts. This one is 0.5292. This is the exact level that the rally was exhausted on November the 3rd. Let's discuss some pro tips. The naked POC is a great target level for short-term setups. Extend the POC on the indicator to show open or non-mitigated levels. Wait for some volume to be established before using the market profile as a day trading tool. Combining Elliott Wave with the point of control can reap some great rewards. Remember, if institutional traders have been short selling gold, where is the best place for them to unload their position? And if you've enjoyed this video, then please subscribe to our channel for more educational content like this.